Okay, so let's make a full breakdown of the situation that we currently have on gold. Now, starting from the monthly time frame, what do we see? Now, on the monthly, we can see that the market has just provided a very strong impulse to the upside. Now, after an impulse, if we want to measure the retracement, where are we supposed to be placing our Fibonacci? Now, if we want to measure the retracement, our Fibonacci needs to be placed from the low to the high of the impulse, and this will give us a first downside target at the 0.382 of the Fibonacci taken on this impulse, which is exactly here. So immediately from a monthly perspective, we have a downside target which is at this level here. Going down on the weekly, what do we see? Now, from a weekly perspective, we can see that the market has just failed continuing higher and has broken structure to the downside. Now, if this weekly candle will close like this, we will have a confirmed break of the structure here. And all this previous weekly support that we have here will be turned resistance at this area. Now, obviously, yes, this candle hasn't closed yet, so we still don't have this confirmed break. But if this candle will close below the structure, in 4 days and 11 hours, all this previous support will be turned resistance, and we already have a downside target from the monthly, which would be a very good scenario. Going down on the daily, what do we see? Now, from a daily perspective, we can see that the market has just provided a nice impulse. So, what we need to wait for is for the market to actually break below the weekly structure and confirm the break below the weekly structure. Also, here on the daily, we have all this previous daily support, which will at that point be turned resistance inside of this area. So, if the market will confirm the break from a weekly perspective, how we will be approaching this current situation on gold. Now, before I show you that, let's first go and give a quick check at what we have from a COT perspective. So, commitment of traders, which is what hedge funds are currently doing in the market. Now, what we can see with the last reports is that net positions are currently increasing. In fact, what has been happening is that we went from 221k net positions to 240k net positions. So, unless we will see with the new report that will come out on Friday that hedge funds have started adding shorts, or anyway that they have started closing longs, it will be very risky to be looking for the continuation to the downside. But we have a very good probability that in the new report, we will see that hedge funds have started closing their longs specifically after such a bearish move. And if that will be confirmed, then we will have even better confluence for this continuation to the downside. Now, the last interesting opportunity that gold had created was after this W formation. In fact, after this W formation, I had created an analysis explaining all the reasons for which from here we wanted to see this move to the downside, which is exactly what the market created. And then after that, the market just started ranging, so no interesting opportunities inside of this area. But now the market has also broken below this range. By the way, I will also link this previous analysis in the description so you can go and check it out. Now that the market has broken below the range, we can definitely expect a continuation. However, as I said earlier, we have to wait for the break. So the simple way in which we will be approaching this with students will be like this. If the weekly time frame will confirm the break below the structure, and if the daily time frame will confirm the break below the structure, and we will see on the COT data that hedge funds have started closing their longs, then as soon as the market will retrace back to this structure, inside of this area, we will have a beautiful confluence of resistance, which is exactly the zone that we will be monitoring with students for a nice shorting opportunity. So after the break on the retracement back inside of this area, we will be monitoring price action with students on the 4-hour time frame. Why? Because monthly, weekly, and daily are the best time frames for the direction of the market combined with the COT data. But the best time frame for entry and confirmations is the 4 hours. So that is why with students on the 4-hour time frame inside of this area, we will be waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and completion of this impulse, correction, and impulse pattern to the downside. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you. And I will see you in the next video.